Everybody wants to know, is Credit Suisse the next Lehman Brothers? Hey everybody, welcome back to the Bitcoin Layer. This is Nick Bhatia, and today I'm going to talk about what's going on with Credit Suisse. Is it collapsing? So let's start with the Credit Suisse stock. It's gone down over 50% this year, causing a lot of concern in the market. Its CDS spread is also skyrocketing, and we'll discuss that as well. The default insurance on Credit Suisse is exploding in price these days as Credit Suisse faces a loss in confidence from the market. Now, at the Bitcoin Layer, we do not believe that CS is the next Lehman Brothers and that we are headed for another 2008-2009 style great financial crisis. We do believe that banks are in much better shape around the world, especially in the US, and the amount of counterparty exposure that would lead to an interbank crisis is not the same that it was in 2008. So here are the main points. Credit Suisse does not have an imminent default risk based off of some ratios that we're pulling from Bloomberg. Now, Bloomberg shows a default probability within the next 1 year of 2.6% on Credit Suisse. This factors in its short-term debt, right? How much money it owes to bondholders over the next year, as well as asset and profitability metrics. Now, Bloomberg combines all these numbers to tell us that there's only about a 2% chance of CS defaulting this year. But when we compare it to other investment banks, especially ones in the United States, such as Goldman Sachs and JP Morgan, we can see that the default insurance of Credit Suisse's counterparts in the United States is much lower. In fact, it's less than 0.1%. The problem for CS is a loss of confidence in the market. Take a look at this chart on the screen. This is a chart of the yield on short-term Credit Suisse bonds. Specifically, these are bonds that are maturing in mid-2023, so only about 9 months away. We can see on this chart that the yield has gone from about 2% all the way up to 10% over the last few months. Now, as bond researchers, we know that the all-in yield is not the most important metric that we take away from the bond market. Yields have gone up all around the world, so the yield of Credit Suisse bonds going up is not out of the ordinary. But if we look at Credit Suisse bonds on a spread basis, this means how much yield above the government bond curve is Credit Suisse offering. We can see that the corporate spread on Credit Suisse bonds has gone up to over 6% from just about 1% a couple months ago. So this is an increase in 5% on credit spreads above and beyond what government bonds have increased in yield over the past few months. This is a sign that the market is worried about CS. It is pulling back funding from CS bonds, which means that Credit Suisse is going to have a difficult time going back to the market to issue new bonds at these much higher yields and much higher spreads. Now we can look at CDS. CDS stands for Credit Default Swap, and a CDS is basically an insurance product on a bond. So let's say I'm an investor. I purchase a Credit Suisse bond that's due in 5 years, and at the same time, I go to an investment bank and I ask them to write me an insurance contract on that bond so that if that bond that I purchased defaults, my insurance pays out so that I don't have any loss. Now, the insurance contract is not free, so I have to take some of the coupon that I'm receiving from Credit Suisse, take some of that money, and pay for insurance on the bond, so I'll get less yield than was stated on the bond. But if the bond goes to $0 or it goes into default, my insurance product will pay out. So CDS is an insurance product. And when we look at this chart on the screen, what you're looking at is the price that you pay in terms of a coupon to receive that default insurance. So the higher this spread goes, the more expensive the insurance is. And on this chart, you can see that not only has the credit default swap spread for Credit Suisse skyrocketed this year, but it has actually gone way past the levels from 2008 and 2009 great financial crisis. This is a big cause for concern, and it has led to rumors in the investment universe of CS counterparties starting to withdraw some of its exposure. Now, we know from 2008, 2009 that one of the most dangerous components of a financial system can occur when banks stop funding each other. So if banks are looking at CS and they all of a sudden are saying, we will not lend to CS under any circumstance, no matter what the collateral is, that is a big cause for concern and can quickly lead to a rapid decline in confidence. Now, if CS cannot fund itself in the interbank market and it cannot fund itself in the new issue corporate bond market, it really is in trouble, and it will need some sort of bailout or rescue by the government or by neighboring banks in order to survive. So what is Credit Suisse doing right now in order to battle this? It has floated the idea of breaking up the bank into 2 or 3 major components, including potentially spinning off its US investment bank, which used to be First Boston, back into an investment bank in the United States that might be renamed First Boston. So basically what Credit Suisse is doing is it is announcing things that could potentially let the market calm down its fear about an imminent default. So one of the things it's trying to do is announce these restructuring deals. But one last thing that we have to consider here is that CS won't be able to do enough in the eyes of the market to save itself and to save its stock price. So I'm going to pull this quote from a Bloomberg article as the last point I want to make to you here to show you that what we believe at the Bitcoin layer is that CS is eventually headed for some sort of rescue from the Swiss government. I've joked a little bit about Christine Lagarde coming in for the rescue here, but in reality, CS is under Swiss jurisdiction, not European, and a European rescue of the investment banking complex would be likely due to an investment bank in Europe having large exposure to Credit Suisse if it goes down, such as Deutsche Bank, for example. So I'll leave you with a quote from this Bloomberg article titled, "Credit Suisse Eyes Outside Money for Investment Bank Spinoff." And the quote is, "The Swiss government, meanwhile, has been working on a new law since March that would provide a public liquidity backstop for systemically relevant banks. Even though the new law would not be passed until next year, officials could move to help Credit Suisse should it need liquidity." And that is the punchline here. The Swiss government is on standby to rescue Credit Suisse. We do not necessarily believe that the market is going to let Credit Suisse off the hook here. So keep it here at the Bitcoin layer. We are covering all of these components of the financial market to try to get a sense of what's going on with interest rates, central banking, and risk markets. Make sure to subscribe to our Substack publication at thebitcoinlayer.substack.com. Subscribe to this channel, like this video, and stay tuned for lots more on potential investment banking crisis. Thank you to my sponsor, Voltage. Voltage is a great Bitcoin and Lightning Network company that is focused on providing infrastructure for businesses and people that want to spin up Bitcoin and Lightning nodes. Make sure to get Voltage's help setting up your node today.